Ethereum at $10,000. It's a number that, well, it sounds almost mythical, doesn't it?
It definitely gets thrown around a lot, a mix of awe and maybe some skepticism.
Exactly. But is it just a wild prediction, pure optimism, or could it be, I don't know, an inevitable future? Maybe closer than we think.
That's the big question, isn't it?
So today we're doing a deep dive. We're looking into the really compelling arguments for it, but also the significant hurdles that stand in the way of ETH hitting that ambitious price target.
Got to look at both sides.
Absolutely. And this deep dive, it's really for you, the curious learner out there. We've gone through stacks of articles, research, expert analysis.
Try to cut through all the noise.
Yeah, exactly. Cut through the noise, pull out the important stuff, and basically give you a shortcut to being genuinely well-informed on this whole topic. It's central to, well, the future of finance in Web3.
It really sits at the heart of it all.
So we'll unpack the big catalysts, look at the challenges, the risks, and maybe most importantly, why any of this actually matters in the grand scheme of things.
The so what factor.
Right. Now, just to set the scene, Ethereum is currently trading, what, somewhere in that $3,000 to $4,000 range, give or take?
Roughly, yeah. Fluctuates quite a bit, but that's the ballpark.
So $10,000, that's a serious move. We're talking a 3x, maybe more. That needs strong fundamental reasons, not just hype.
Definitely not just hype. It needs real drivers.
But let's remember, Ethereum isn't just another crypto. It's dominant. The leading smart contract chain, DeFi, NFTs, even this early tokenization stuff. It runs on Ethereum.
And that's precisely the point, isn't it? To really judge a prediction like $10K ETH, you have to look beyond the price tag.
Yeah, just focusing on the number is missing the point.
Totally. It's like judging a skyscraper just by how tall it is without knowing anything about the engineering, the foundations, the economics behind it.
Good analogy.
We need to dig into the tech, the economics, how it's weaving itself into traditional finance. That's what dictates the trajectory, much more than, just speculative buzz. It's the substance, not just the surface.
Love that. The substance, not the surface.
Mm-hmm.
Okay, so let's dig into that substance. Let's build the bull case. What are the powerful forces that could actually push ETH towards $10?
Well, top of the list for many, especially after what we saw recently, has to be spot Ethereum ETF approvals.
Ah, yes, the ETF effect. We saw it dramatically with Bitcoin, didn't we?
We absolutely did. The core idea here is that a spot ETH ETF could just unlock enormous institutional inflows.
Explain that a bit more. How does an ETF do that?
Think about a big institution like a pension fund or a hedge fund. Right now, getting exposure to ETH directly, it's complicated.
Custody issues, private keys, different exchanges.
Exactly. Regulatory hurdles, accounting complexities. It's a lot of operational hassle. An ETF just wraps it all up in a familiar package.
It's like buying a stock.
Precisely. They can buy it through their existing brokerage accounts, just like any other traditional asset. It massively simplifies things and, crucially, it reduces the operational risk for these big players. It lowers the barrier to entry significantly.
And we have that direct parallel, the Bitcoin ETF effect, from what, late 2023 into 2025?
Yeah, a perfect case study.
Bitcoin surged after those approvals. Billions flowed in. Something like over $12 billion net inflows in just the first few months pushed Bitcoin to new all-time highs.
The demand was clearly pent up, institutions wanted in, and the ETFs gave them the regulated, easy pathway.
So the thinking is Ethereum could potentially mirror this, right? Once its own spot ETFs get the green light and launch.
We could see a very similar dynamic, a significant injection of institutional capital flowing into ETH.
It's not just about the price pump, is it? It's about legitimacy.
That's arguably the bigger long-term impact. It signals that ETH is becoming a recognized part of the traditional financial system. It integrates crypto more deeply, opens the door to a much wider pool of capital. It's a huge stamp of approval.
A stamp of approval that could really shift perceptions. Okay, so ETFs are a massive potential catalyst. What else is in the bull case?
Well, moving beyond external factors, let's look inside the ecosystem itself. A big one is the potential for a resurgence in decentralized finance, maybe a DeFi 2.0, and a rise in total value locked, or TVL.
Right, TVL. We talk about it a lot. It's basically the amount of money locked up in DeFi protocols on Ethereum. How does that drive the price?
Well, higher TVL generally means more activity, more usage of the network. Think lending, borrowing, trading on decentralized exchanges. All that activity requires ETH. Often for gas fees, sometimes as collateral.
So more DeFi activity equals more demand for ETH itself.
Exactly. And if we see a new wave of DeFi growth, maybe driven by better user experiences or new innovations, billions could flow back into Ethereum protocols, especially if yields become more attractive.
Which connects to the broader economy, right? Like if interest rates come down.
Precisely. If global liquidity increases or rates stabilize or fall, investors naturally start looking for higher yields than they can get in traditional markets.
Yeah.
DeFi could become very appealing again.
We saw a glimpse of this power during the NFT boom back in 2021, didn't we?
Absolutely. Ethereum was the backbone of that whole craze.
All those JPEGs trading. It drove network activity through the roof and pushed ETH to its all-time high, near $4,900.
It showed how a specific use case built on Ethereum could create massive demand. A new DeFi cycle might maybe combined with another NFT wave or something totally new. It could definitely repeat that kind of pattern.
So institutional access via ETFs, a potential DeFi resurgence. What's next on the bull list?
Something potentially even bigger in the long run? Real-world asset tokenization, or RWA.
Okay, RWA. This feels like a bridge between crypto and the traditional world. What exactly is it?
It's about representing ownership of traditional assets. Think real estate, bonds, commodities, maybe even art as digital tokens on a blockchain.
So instead of a paper deed for a house, you'd have a token.
Essentially, yes. Or representing shares in a private company, or fractional ownership of a piece of art. It makes these often illiquid assets potentially much more liquid, divisible, and easier to trade, 247 globally.
And Ethereum is the main playground for this.
It's definitely emerging as the primary platform. Major financial institutions are already exploring this heavily. We're talking JP Morgan, BlackRock, Franklin Templeton.
BlackRock's name keeps coming up. They seem serious about this.
Very serious. They launched their BUIDL fund, which tokenizes U.S. Treasury bonds directly on the Ethereum network. They've also run pilots on Ethereum Layer 2s like Polygon.
Wow. So they're not just talking, they're actively building on Ethereum.
Exactly. They see Ethereum not just as, a crypto to invest in, but as foundational infrastructure for the future of finance. This RWA trend could potentially bring trillions of dollars of value from traditional markets onto blockchain networks.
Trillions. That's a staggering number. And Ethereum is the main platform.
The implications for demand for ETH, for network security, for block space, it's immense. It's a fundamental replatforming of finance.
Okay, that's huge. Now, something else happened to Ethereum itself that plays into this institutional appeal, right? The move to proof of stake.
Absolutely. The merge in 2022 was a monumental shift.
Primarily known for cutting energy use, which is a big criticism.
Cut energy use by over 99%, which was massive from an ESG perspective. But economically, it was just as profound. It turned ETH into a yield-bearing asset.
Explain the yield part. How does that work?
By moving to proof of stake, ETH holders can now stake their coins, lock them up to help secure the network and process transactions. In return for providing this security, they earn rewards in the form of newly issued ETH.
So you earn passive income just for holding and staking ETH.
Essentially, yes. It's somewhat analogous to earning interest on a bond or dividends on a stock, though obviously with different risk characteristics.
And institutions like yield, don't they?
They certainly do. A relatively stable, predictable yield on a major digital asset like ETH, that's incredibly attractive, especially in a diversified portfolio. It gives ETH this sort of bond-like appeal alongside its potential for capital appreciation.
So the merge wasn't just technical, it was an economic transformation, yield-bearing. And wasn't there something about supply, too? Deflationary.
Yes, that's the other crucial piece, linked to an earlier upgrade called EIP 4.59.
Right, EIP 4.59. That introduced the burn mechanism.
Correct. With EIP 1.59, a portion of every transaction fee, the base fee, is permanently destroyed, burned. It's removed from circulation forever.
So the more people use Ethereum, the more ETH gets burned.
Exactly. Now, combine that burn mechanism with the fact that staking locks up a significant chunk of ETH's supply.
More than 25% is staked now, right?
Around that, yes, and growing. So you have fees burning ETH and staking locking up ETH. If network activity is high enough, the amount of ETH burned can actually exceed the amount of new ETH issued as staking rewards.
Meaning the total supply of ETH actually decreases. It becomes deflationary.
Precisely. Under heavy usage, ETH can become a deflationary asset. This is incredibly powerful from an economic perspective.
Wow, imagine an asset that gets scarcer the more popular it becomes.
It's a unique design. If demand is growing, driven by ETFs, DeFi, RWAs, while the supply is potentially shrinking, that creates a very strong fundamental case for upward price pressure. It's basic supply and demand, but with a deflationary twist built in.
Okay, so just to recap the bull case. Potential massive institutional inflows from ETFs, a possible DeFi resurgence driving usage, the enormous potential of RWA tokenization happening on Ethereum, ETH itself becoming a yield-bearing asset attractive to institutions, and a deflationary supply mechanism. That's a pretty compelling set of arguments.
It's definitely a strong narrative built on both external adoption trends and internal economic design.
But,
Yeah.
and there's always a but, we need to be balanced. Let's flip the coin. What are the major challenges, the risks, the headwinds that could stop ETH from reaching $10, or at least slow it down considerably?
Absolutely crucial to consider the bear case. And the first big one is simply competition.
The ETH killers, as they used to be called.
Well, maybe not killers, but certainly strong competitors. Ethereum, for all its strengths, network effect, security, developer community, it faces stiff competition from other Layer 1 blockchains.
Like Solana, Avalanche, others.
Exactly. Solana, Avalanche, Near, Aptos, Sui. Lots of innovative projects out there. They often market themselves as faster, cheaper, offering maybe a smoother user experience, at least initially.
So they're nipping at Ethereum's heels, trying to steal market share in areas like DeFi, NFTs, gaming.
They are. They're constantly innovating, pushing the boundaries on speed and cost. While Ethereum has its deep roots in decentralization, these newer chains can sometimes feel more nimble, more performant for certain applications.
So it's a constant battle. Can Ethereum's strengths overcome the speed and cost advantages of rivals? Or does it have to keep evolving rapidly itself?
It's definitely an arms race. Ethereum is evolving mainly through Layer 2s, which we'll get to, but the competitive pressure is real and shouldn't be underestimated. It forces Ethereum to stay sharp.
Okay, competition is one major hurdle. What's another big one looming over the space?
Regulation, or rather, the lack of regulatory clarity, particularly in the US.
This whole issue of whether ETH is a security or a commodity, right?
That's the crux of it. This ambiguity hangs over the market like a cloud. For large institutions, regulatory uncertainty is poison.
Why is it such a big deal for them?
Because they operate under incredibly strict compliance rules. If they don't know the definitive legal status of an asset like ETH, they simply can't deploy billions of dollars into it without taking on unacceptable legal and reputational risk.
So this lack of clarity is actively holding back institutional adoption, even if they're interested.
Absolutely. It creates hesitation, slows down decision-making, and prevents the kind of full-scale institutional engagement we might otherwise see. Getting clear rules of the road is critical for Ethereum, and crypto more broadly, to reach its full potential.
It's a major bottleneck.
Okay.
Competition, regulation. What about issues with Ethereum itself?
Yeah.
Scalability?
Yes, that's the next key challenge. While Ethereum's mainnet is very secure and decentralized, it does face limitations in how many transactions it can process per second, and transaction fees, the gas fees, can get very high during peak demand.
We all remember times when a simple transaction cost $50 or $100 in gas.
Exactly. That's not sustainable for mainstream adoption, which is why the entire ecosystem relies so heavily on Layer 2 scaling solutions.
Right, the L2s, like Arbitrum, Optimism, Base, ZK Sync.
All those. They are essentially separate blockchains built on top of Ethereum. They process transactions much faster and cheaper, and then they bundle up proofs of those transactions and post them back to the secure Ethereum mainnet.
So they inherit Ethereum's security, but offer better performance.
That's the idea. And they've been incredibly successful in handling a huge volume of transactions and making Ethereum usable for everyday activities. But
There's always a but.
and does mean there's a reliance on these external layers. It adds complexity for users managing funds across different layers, bridging assets back and forth. It's not always seamless.
Yeah, the user experience can be a bit fragmented, moving between L1 and different L2s.
It can be. While it's getting better, it's not quite the unified experience you might get on a single high-throughput chain. So while L2s are vital for scaling, the reliance on them highlights the mainnet's own limitations and adds layers of complexity.
Got it. So competition, regulatory uncertainty, and scaling bottlenecks reliant on L2s. Anything else in the bear case?
The big one that affects everything: broader market cycles and macroeconomic factors.
The macro environment. Can't escape it.
Nope. An ambitious target like $10,000 ETH doesn't just depend on Ethereum's own progress. It heavily depends on a favorable global economic climate.
Meaning what specifically? Like low interest rates, lots of money printing.
Generally, what we call a risk-on environment. That often means ample liquidity in the financial system, maybe expectations of interest rate cuts, general optimism about economic growth. In those conditions, investors are more willing to put money into higher risk, higher reward assets like crypto.
And if the opposite happens, recession fears, Rising rates, tightening liquidity.
Then capital tends to flow out of risk assets and towards safer havens like bonds or cash. Crypto, including Ethereum, could suffer significantly in that scenario, regardless of its own fundamental improvements.
So even if ETH gets ETFs, RWAs take off, and the tech works perfectly, a bad global economy could still tank the price.
It absolutely could. We've seen it happen before. Crypto is still very sensitive to these broader macroeconomic tides. It's a crucial factor to remember.
Okay, a healthy dose of realism there.
Yeah.
So we've covered the bullish catalysts and the bearish challenges. Let's zoom out again. Why does hitting $10K even matter? What's the bigger significance?
Well, first off, hitting $10K would really cement Ethereum's narrative as the world computer.
More than just a slogan.
Much more. It would signal widespread global confidence that Ethereum is the foundational layer for decentralized applications, for DeFi, for Web3. A price like that reflects deep conviction in its technology, its security, its future potential. It's as the market believes this is truly vital infrastructure.
And what about the rest of the crypto market? Would ETH hitting $10K lift everything else?
Almost certainly. Ethereum is such a huge part of the overall crypto market cap, second only to Bitcoin. A major move like that would likely pull the entire market upwards.
Like a rising tide lifting all boats.
Exactly. It would likely push the total crypto market cap to new all-time highs, attract a flood of new capital into the space, spur more innovation, and generally create a very positive feedback loop for the entire ecosystem.
And what about the specific things built on Ethereum, like DeFi, NFTs, those tokenized assets? What does a $10K ETH mean for them?
It provides tremendous validation. When the foundational layer reaches such a significant valuation, it lends immense credibility to everything built on top of it.
So it makes DeFi seem less risky, makes NFTs seem more legitimate.
It contributes to that, yes. It signals mainstream acceptance and trust. It encourages more institutions to explore and invest in DeFi protocols. It solidifies NFTs as a real asset class. And it accelerates the adoption of RWA tokenization. It helps transition these things from niche experiments to mainstream financial tools.
So really, what this means for you, the listener, is seeing these technologies potentially shift from the fringes to become a core part of the future financial and digital landscape. Not just for crypto natives, but for everyone.
Yeah, that's the potential long-term impact, yeah.
Oh, okay, let's make this even more concrete. Let's dive into some specific supporting stories and data points we've touched on. The Bitcoin ETF effect. Can we quantify that impact a bit more?
Sure. We saw over $12 billion in net inflows within the first few months. Daily trading volumes for the Bitcoin ETFs sometimes topped $3 billion. This wasn't just retail excitement, it was significant institutional capital moving in.
And the price reaction.
Bitcoin surged something like 70% in the period around the launch and initial inflows. It provides a very real, data-backed template for what could happen with Ethereum ETFs. The plumbing is built, the demand seems to be there.
Okay, that's compelling. What about real-world use cases? You mentioned Visa.
Right, Visa. A global payments giant. They've been actively testing and using USDC stablecoins running on Ethereum Layer 2s like Base and also on Solana for cross-border B2B payments.
So not just experiments, but actual settlement.
Yes, settling transactions between their partners faster and cheaper than traditional banking methods. This is a massive validation of stablecoins and the underlying blockchain infrastructure, including L2s, for serious large-scale financial operations. It shows the tech is ready for prime time in certain areas.
And BlackRock again with the RWA pilot. Why is that so significant?
Because it's BlackRock, the world's largest asset manager, over $10 trillion AUM. When they choose Ethereum to launch a tokenized treasury bond fund, the BUIDL fund,
It sends a powerful signal.
an undeniable signal. They're not just speculating, they're building the future of financial products on Ethereum. Larry Fink, their CEO, has explicitly talked about tokenization being the next generation for markets. Their actions show they believe Ethereum is a key part of that future.
It's hard to overstate that level of institutional commitment. And historically, you mentioned the NFT boom and the merge.
Yeah, just briefly revisiting those. The 2021 NFT boom showed Ethereum's power to host entirely new digital economies, driving ETH to its previous all-time high. The 2022 merge fundamentally changed ETH's economics, making it yield-bearing and potentially deflationary via POS and EIP 1559. These aren't just isolated past events, they show a pattern of innovation and market impact.
Okay, let's look at some specific metrics now. You mentioned price projections like 6K, $8K, $10K plus. How are those derived?
They usually reflect different scenarios. Like $6K might assume steady growth, but maybe delays in major catalysts like widespread ETF approval. $8K might assume ETFs launch successfully, but maybe DeFi growth is moderate.
And $10K plus requires everything to basically go right.
Pretty much. Strong ETF inflows, significant RWA adoption taking root, maybe another DeFi summer type event, and a supportive macro environment. They're models based on assumptions about these catalysts playing out.
Makes sense. What about the flippening ETH versus BTC market cap?
Always a hot topic. Right now, Bitcoin's market cap is significantly larger. But if ETH hit $10K, depending on what Bitcoin does, ETH's market cap could potentially reach, say, 70% or even 80% of Bitcoin's.
So not necessarily flipping it, but getting much closer.
Exactly. It would represent a major shift in the market's perception, valuing Ethereum's utility and platform potential much more highly relative to Bitcoin's store value narrative. It would be a symbolic milestone for the whole space.
And the ETH supply burn tracker, what does that actually show us?
It visualizes the impact of EIP 2559. You can literally see day by day how much ETH is being burned through transaction fees versus how much new ETH is being issued through staking rewards.
And sometimes the burn is higher?
Yes, during periods of high network activity like big NFT mints or intense DeFi yield farming, we've seen days or even weeks where Ethereum was net deflationary. More ETH destroyed than created. It makes the scarcity real and measurable.
Powerful. And staking growth.
Just look at the charts showing the total amount of ETH staked. It's been on a steady upward trend since the merge. Over 25% of all ETH is now locked in staking contracts.
That means?
It means less liquid supply available to be sold on the open market, which naturally supports the price. It also shows increasing long-term conviction from holders who are willing to lock up their ETH to earn yield and secure the network. It's a sign of ecosystem health and belief.
Finally, that correlation between DeFi TVL and ETH price.
Historically, there's been a pretty strong positive correlation. When TVL in Ethereum's DeFi ecosystem rises, the ETH price tends to follow and vice versa.
Why is that?
Because higher TVL usually means more activity, more protocols being used, more demand for ETH, for gas, for collateral, for trading pairs on DEXs. More value locked translates often directly into more demand for the underlying asset. It shows the economic engine is humming.
Okay, we have really covered a ton of ground here. The bull case, the bear case, why it matters, the data. So after all that, turning it over to you, the listener, do you actually think Ethereum will hit $10K this cycle? Or is that just hopium, wishful thinking?
And as you think about that, really consider, which catalysts do you find most convincing? Which ones seem most likely to actually happen? And on the flip side, which challenges worry you the most? Seem like the biggest roadblocks.
Yeah, weigh the probabilities. And personally, would you stake your ETH for the long haul to get that yield? Or keep it liquid, ready to trade?
Big question for ETH holders.
And the flippening, could ETH actually overtake Bitcoin if it hits $10K?
Yeah.
What about the competition? Is Ethereum's foundation stronger than, say, Solana's speed?
Lots to chew on there.
And one more for fun. If ETH does hit $10, which altcoin do you think gets dragged up the most with it? Which one moons next? Let us know your thoughts on all of this in the comments. We really do read them, and your perspectives make this whole discussion way more interesting.
Definitely. Community insight is invaluable.
And hey, speaking of community, if this deep dive sparked your interest, if you learned something or had an aha moment about Ethereum's potential.
Or even if you completely disagree with our take.
Yes. Please consider liking this video, subscribing to the channel, maybe hitting that notification bell. It sounds cliche, but your engagement, every like, comment, share, subscribe it, genuinely helps us out massively.
It really does. It tells the algorithm that people find this valuable, which helps more people discover it.
And it allows us to keep doing this, bring you these detailed, hopefully insightful deep dives into the crypto world every week. We seriously appreciate the support.
Couldn't do it without you.
Okay, so final thought to leave you with. We've talked a lot about $10K ETH, about finance, Web3 adoption, but let's think bigger picture for a second. If Ethereum truly does become this world computer, this foundational layer, what kind of societal shifts beyond just money and NFTs could it enable?
Interesting question, like decentralized identity, new forms of governance, supply chain tracking.
Exactly. Think really broad. And then what would be the single biggest non-technical hurdle? Maybe social, political, ethical, that it would still need to overcome to achieve that kind of truly ubiquitous global adoption?
That's a deep one. It forces you to think beyond the market cycles and the tech specs. It's about the long game, the real-world impact, and all the human complexities that come with building something potentially world-changing. Is the world ready, even if the tech is?
Something to ponder. Thank you so much for joining us on this deep dive into Ethereum's potential future. We hope you found it valuable, and we look forward to exploring more of this fascinating space with you next time.